Good morning, friends. Okay, let's continue with the discussion. I'll quickly summarize what we have done in the previous sessions. We were doing mutual funds. I'll start from the beginning itself. First, we learned a concept called MF return versus the individual return, where we learned that the return which a mutual fund should generate should be more than what an individual can earn on his own. Reason is there were two types of expenses. What are the expenses? Initial expense ratio and annual expense ratio are technically called recurring expense ratio. So MF return is equal to own return divided by 1 minus initial expense ratio plus annual expense ratio. This is if you have no opportunity cost. In case there is an opportunity cost element in a question, then we need to do something called as a cost benefit analysis, where there will be an opportunity cost in own investing, or there is a benefit when you go through your mutual fund investing, which is technically increase in professional income. Then the next part we went ahead and saw something called as return computation. The base formula is what I get back minus what I give divided by what I give into 12 by m. If you do, it's called annual return. Without 12 by m, it's called holding period return. Now the formula technically is NAV1 minus NAV0 plus D1 plus CG1 divided by NAV0 into 12 by m or without 12 by m. As we proceeded, we also learned that the period of holding can be computed as a balancing figure if you have the holding period return and annual return using the logic holding period return into 12 by m. M is the holding period is equal to annual return. Reverse work and get the formula here. Then dividend payout plan and dividend reinvestment plan. We learnt also this. What is dividend payout plan is dividends are getting paid as and when an organization is declaring dividend. In this scenario, we go ahead and compute return in the same manner. Same manner is NAV1, NAV0, D1, CG1 divided by NAV0. In case there is a reinvestment happening, then the number of units at the start and the number of units at the end is not going to match. We need to compute the closing units into closing NAV, opening units into opening NAV, whole divided by opening into 12 by M into 100. This is what we learned as far as your dividend reinvestment is concerned. We learned that there are four types of plans. Growth plan, where there are no changes in the number of units. Simple formula NAV1 minus NAV0 can be done, or ending value minus the opening value divided by opening value can be done. Bonus plan, the number of units will keep changing. So in this scenario, what we do is we go ahead and compute. We go ahead and compute our returns. Just give me a minute. We go ahead and compute our returns. How we go, so we compute the closing units. How we compute the closing units is we start with opening units. There will be a bonus ratio. Extra units are allotted. You get your closing units. You do it once, you do it twice, you do it 3 times. There are a few examples which I had given for you to be done. Then dividend payout and reinvestment is discussed. This is the format we follow for dividend reinvestment. Date, opening units, dividend percentage, dividend in rupees, reinvestment NAV, and the new units are computed. In this entire calculation which we are doing, our dividend figure will be multiplied. That is, the number of units will be multiplied with face value. Number of units will be multiplied with face value to get to the dividend in rupees. Divide by the NAV, you will get dividend in units. Any doubts on this? There were two types of scheme. One is called open-ended scheme and a close-ended scheme. In an open-ended scheme, you can enter anytime, you can exit anytime. So purchase and sale happens at NAV. Whatever is the NAV, at that rate the purchase and sale will happen, or entry and exit will happen at that rate. The second type is your close-ended scheme, where the entry and exit is only at a specified time. Because you cannot get exit at any time, as per the regulation, it is mandatory that it is listed. Close-ended scheme is otherwise also called as exchange traded funds. This is other name for this. So here what you will have to do is you will have to list it. Because listing is done, my buying and selling is not going to happen at NAV. It is going to happen at an adjusted price. It is going to happen at a adjusted price. That adjusted price is called adjusted NAV, or the purchase price, which can be slightly above the NAV or slightly below the NAV. It can be slightly above are slightly below, and because of which the return for a close-ended scheme can deviate from the return for a open-ended scheme. Taxation impact: for your bonus units, you take the cost of acquisition to be zero, and STT is not a tax deductible expense. This is what we had done in the previous session. In the previous session, I had told you work on this question number 7. Assuming you have done it, even if you have not done, I'm not bothered. I'm not going to discuss the entire solution here. This question 8, in case anybody has a doubt, I'll take it up. Otherwise, there was one doubt a student had asked. It's a dividend plan. The term dividend plan can be understood as two ways: dividend payout, dividend reinvestment. If problem is silent, we normally assume reinvestment. Reason for reinvestment is to make the problem little complicated. If you assume it as payout, it will become extremely easier. Just give me a minute. Live online guys, is the issue? Is there an issue with the screen? So dividend payout or dividend reinvestment?
Sir,
Give me a minute. Okay, so the term dividend plan can be understood as dividend payout plan, dividend reinvestment plan. If problem is silent, we normally assume it as reinvestment. If you make it as payout, the entire question loses its relevance. You just need to go to add dividend and then get the return. So ideally, if problem is silent, it will be taken as dividend reinvestment plan. I hope no other doubts are there. In case any other doubt was, this was doubt a student had asked me. Any doubts in this? Any doubts in this? Otherwise, it's very similar to the previous question. I want to discuss on these two numbers now. 2,39,000 is the value you get in first plan by investing 2 lakh rupees, and 3,31,000 is the value you get in the second plan by investing 2 lakh rupees. This is the two returns you should have ideally got. After getting this, you would have calculated approximate return, technically called as our annual return, using the formula approach. Now, what does the concept say? Effective yield, return computed as annual return through formula ignores time value of money, ignores the time value of money, and hence not fully accurate. Yesterday when we did a problem, we saw some 67%, 70% return. Such returns are through only formula. In reality, the returns will be on the lower side if you consider or give effect to something called as time value of money. Now, what does time value of money say? It says very simple. For return computation, go through IRR approach. Go through IRR approach. What is IRR approach? Year 0, there will be an outflow, and on maturity there will be an inflow. On maturity there will be an inflow. One outflow, one inflow will be there, and we
sir,
go. Yeah, sorry guys, you can type it rather than
sir,
yeah,
hello.
yeah, yeah, friend, please type it. No, Tirumala, is there a doubt?
Hello, sir. Hello, sir.
We are not able to hear you. Can you please type it in the chat box? Okay, there is one outflow and one inflow. There's one outflow and one inflow. Whenever there is a single outflow and single inflow, or even multiple inflows, we will go through an IRR approach of calculation. Now, for doing IRR approach, I'll do year, cash flow. Guys, can you go on mute? If there is a doubt, you please type it in the chat box, because I'm not able to hear you properly. Year, cash flow, PVF, DCF. Year, cash flow, PVF, and DCF. We do the calculation. We may get a positive NPV. We may get a negative NPV. One positive, one negative. Live online students, I'm putting all of you on mute because today there's a disturbance. You guys can type it in the chat box. Okay, so the return calculation which we are doing, we are going to do IRR approach, one positive NPV, one negative NPV. Why in exam we don't follow this approach is, one, it becomes little complicated to do. When I say complicated to do, it's not the calculation is very heavy and all, just that it is going to take a lot of time, because I need one positive NPV, one negative NPV. When I do my calculation, I do not get that one positive, one negative. I have to repeat the answer. That is why most of our exam question, we will do return calculation through formula approach. When you go to your international courses and all, they use financial calculators where you put the numbers automatically IRR will come in the calculator itself. So in such a scenario, I have no problem. But in our case, we cannot use those calculator. If I put the data in an Excel sheet, again I can get the answer very fast, no problem. Second thing, for doing this effective yield through IRR approach, my return, the number of years should be a whole number. Last question we did 124 months. That and all I cannot do it in this IRR approach in your notebook. In your notebook, you can't do it. In Excel, I can do because I will need something called as power 10 4 by 12. 4 by 12 is 10.3333 years, which your notebook can't handle. Your calculator cannot give you a discount factor for 10.33333 years for doing the IRR calculation. So two limitations are there from our notebook point of view. It's nothing from a practical world point of view. Practical world, I am a mutual fund investor, and the app in which I invest, they always show at the top IRR. IRR is given at the top itself. More than a year, whenever it's more than a year, they show IRR. Less than a year, they show normal return. So whenever it's more than a year, IRR is the right approach. But still, because of the limitation is your notebook or your calculator can't help at few places. If calculator can do the calculation without doing this one positive, one negative, this one positive, one negative is just technically waste of time. Why waste of time? In a practical world, I'll just write year cash flow in an Excel sheet. I have a formula called IRR. It will automatically give me the answer. So doing this calculation, we are not learning any new concept. The IRR calculation which you have been doing, maybe you have done at inter level also. Now also we will do at many places, but that doesn't give us any extra learning as such from a practical world point of view. That is why maybe at this place ICI did not bring in IRR too much, but still in one exam question they ended up asking something called as do IRR approach. Clear? This is the background. We have been ignoring time value of money till now. Reason for ignoring is very simple. Time value of money is good to know, ideally should be done also, but last problem which I did, that problem you cannot get your answer through the IRR approach. I can get it in the Excel and give you the answer, but in your notebook IRR approach will not be possible for the previous question because it was 10.33333 years, 124 months. It's technically 10.3333 years, which our notebook can't handle. Clear? Any doubts till this? Okay, now coming back to this question. First plan, this return was 3.9%. 3.9%, which means my IRR is going to be closer to it, not very same and all. It is only going to be closer to 3.9%. First plan, we will do it together. Second plan, you will do it and then I'll discuss the answer. Okay, 3.9% was the approximate answer. We have been given these present value factor 2%, 4%, 8%, and 13%. 2 and 4 can give me one positive and one negative for the 3.9%. 8 and 13 can give me one positive and one negative for the second plan. First plan, we had 3.9% approximate answer. I had told you to do the calculation. I'm not discussing any of that calculation. Okay, 3.9%. 2 and 4 we will try. Second one, the answer was 13.12. Closer to 13.12 will be the IRR. Okay, closer, not exactly same, closer. So they have given 8 and 13. We will try 8 and 13 for the second plan. Let's do. The question has asked effective yield. Okay, if the question asks the word effective yield per annum, still it can be normal answer only. But if they give you this PVI factors and all, it means they are giving you an indication that follow the IRR approach. Follow the IRR approach to calculate the return. Technically speaking, IRR is the best approach. Out of 10 questions I do on return calculation, this is the only problem where we will do IRR. Only one problem where we are going to do IRR. Limitation is your notebook and your calculator, nothing else. Otherwise, doing IRR is the best approach to do the calculation. Let's start. Computation of effective yield. Computation of effective yield through IRR approach. Effective yield through IRR approach. Live online guys, if you have doubts, you please type it. Today I'm not unmuting you because there's some disturbance. Effective yield through IRR approach. year cash flow, PVF at 2%, DCF, PVF at 4%, DCF 2% and 4%. Ideally, if a calculator allows me to do it, which a financial calculator will help, I wouldn't get into all this calculation. Directly I'll apply it and get to the IRR. This is just doing something called as an approximate answer again. Year 0, what is the outflow for the first investor? Negative 2 lakhs, negative 2. Year 5, we get back 2 lakh 39,000.17. Solution is set 2 decimal 239,003.17. Okay. PVF, if problem is silent, how present value factor and all is calculated, you would be knowing. I'll anyway discuss it later at the required time. We normally take 3 decimal. Question has given 4 decimal number. Let's follow whatever the question has says. 1, year 0 is 1, 0.9057, and 6806. Multiply, get a 2 decimal NPV. Two one six 465.17. That's what I was thinking. I'm getting a wrong number here. 8219. Sorry. 8219. 8219. 1,96,436.71. Let me know if these numbers are fine. Any different numbers you get, you'll have to tell me. 16,465.17. What's the other side number? 3,000. Any doubts on the numbers here? Any doubts on the numbers here? Clear? Any doubts on the numbers here? Can you proceed? Now, once I get one positive NPV and one negative NPV, the IRR approach, anyway, I'll discuss in detail when I go to capital budgeting. But it basically says that we are trying to find where we will have zero NPV. This is what IRR was saying. Now, computation of IRR. I'll give you the formula as of now. We will discuss in depth when I go to capital budgeting. I don't want to spend time on this at this point of time. As of now, you can write the formula. Logic, everything will come when we go to capital budgeting. Some of you may be aware of the formula logic also, but anyway, I'll discuss when I go to capital budgeting. I don't want to discuss at this point of time because I cannot discuss much on this now. So IRR is equal to L1. L1, again a formula which you are not going to remember. I'll tell you now also, it's not going to be remembered by you. Logic, everything will flow there. NPV at L1, NPV at L1 divided by NPV at L1 minus NPV at L2 into L2 minus L1. We are not going to remember the formula. Again, I'm repeating, we are not going to remember it. There's something called as a timeline approach. I'll explain that at that point of time. L1 means lower discount rate, L2 means higher discount rate. So IRR is equal to L1 is 2 percentage, 2 percentage you'll add it in the end, okay? 2 L1 means lower rate. 2 NPV at L1 is NPV at the lower rate. NPV at the lower rate. 2 16,465.17, 0.17 minus of minus, minus of minus, minus of minus will become plus, minus of minus into 4 minus 2, 4 minus 2, lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate into L2 minus L1. 2 plus, you do this calculation, give me a 2 decimal answer, round off to 2 decimal is the ICA solution. 2 plus 1 point how much? Second segment. 16,465 divided by, you do that calculation, 465.17 divided by 20028.46 into 2 into 2, 2 plus how much? 1 point, 1.6, 3.64, only 2 decimal, round off to 2 decimal point is the ICI answer. It says round off calculations up to 2 decimal points. So I'll keep it as 3 point, that's what ideally the answer should be, 3.64%. You see 3.64 versus 3.9 here. When we did last question 60-70% and all, no, that if you do through IRR you may get only 40-50%. IRR may give a number of only 40-50% because that was a longer period. 10 years impact will be on the higher side. Any doubts on this? The logic for the formula, everything will flow to you later. Some of you may be aware, you could have done it at CA Inter, but still I'll discuss this little later. I want you to do the second plan now. I'm giving you 3-4 minutes. In case you have not done the workings, these are your numbers, okay? Outflow 2 lakh, inflow 331,205. I'll give you around 3-4 minutes. Please complete the IRR of the second plan. 3-4 minutes for you. Okay. So as I was checking the answers of yours, nothing much to discuss here, but still some of you made some mistakes. One, some of you have taken 3 decimal PVF. Question is crystal clear, given the PVF numbers, 3 decimal is you did your calculation. Don't try to do that. Normally we take 3 decimal only. Normally we take 3 decimal only. But if question has given the information, go ahead and take the information. Some of you made mistake in the formula application. Instead of taking 8% as L1, you have taken 13% as L1. L1 represents the lower discount rate, L2 represents the higher discount rate. Nothing much for me to discuss, so I'm directly showing you the answer. You will have to do the multiplication. You get 2 NPVs. You get 2 NPVs, one positive, one obviously will be negative, and with that we calculate the final answer. Any doubts on this? I don't see any difficulty in this. That's why I've not done the calculation again. Any doubts on this? Clear? You can put a tick around whatever is your difficulty level for the question. Write a note if you want. Any doubts on this? I'm not giving you any time in this question. Clear? This IRR approach discussion is not over. Okay, when I say not over, what is IRR is not over, that will go to capital budgeting. That part is still pending. Most of you could be aware also, but still I will do a detailed discussion when I go to the capital budgeting chapter. Can we proceed? Clear? Okay, go through question 8. Go through 8. Go through the question first. Okay, measures Corpus and AMC Asset Management Company on 1/4/2015 floated two schemes, dividend plan and bonus plan. Our understanding will be dividend plan is dividend reinvestment plan, unless I want to change the assumption. Mr. X invested in both the scheme. Following detail except the issue price. The issue price detail is not given. They have given similar like the previous question. They have given dividend plan data, bonus plan data. Three dividends have been declared. Two bonus have been declared in this period. Three dividends and two bonus. Additional detail, investment figure is also given. Average profit 27,748.60 looks like in rupees. That 27,748 looks to be rupees. And average yield in percentage. One person they have given yield in percentage. Another person they have given something in rupees. Our objective is to calculate the issue price of both the scheme. Issue price of both the scheme. So they have not given us what is the issue price. Now coming to the question, they are saying I give you investment figure 9 lakh 20, 10 lakh. If I get to know how many units were allotted to me, the balancing figure is the issue price. If I get to know units allotted. Here, average profit is given 27,748. The term average may indicate its yearly profit. The term average may indicate it is yearly profit. So every year I made a profit of 27,748.60. How many years is the investment? We invested 1/4/2015, 31/3/2020. How many years in between? 5 years. So my profit for 5 years is 27,748.60 into 5. 27,748.60 into 5 is the overall profits made by me. I made a profit of this much into 5. I know my investment figure. Investment plus profit. Investment plus profit will give me the closing value. I'll do the entire calculation. First, I'm explaining the broad structure. Investment plus profit, closing value. Closing value divided by the closing NAV. Divided by the closing NAV is the closing units. From closing units, you have to reverse work first dividend, second dividend, third dividend, and get to the opening units. Get to the opening units. When this came first time in exam, almost none of the student could tackle this question because they never anticipated that something like this can be tested by ICI. What they ended up doing is our usual approaches. You give me in this order, I'll follow. Suddenly in the reverse order, that also 3 times dividend, 2 times bonus became little challenging for the students. I'll explain again. I know the investment figure. I know the average profit. First party average profit is given. Second scenario, they have given percentage. Percentage will convert into rupees and do the calculation. So investment plus profit is the closing value. Closing value divided by closing NAV is closing units, and then we will put it in that format which we saw, date, opening units. But there first we will do 31/3/2019 calculation. After doing that we will do 31/3/2018 calculation. After doing that we will do 31/3/2017 calculation. Once we do that, we'll get the opening units. Once you get opening units, investment divided by opening units is the opening issue price or the opening NAV. Any doubts on this? Any doubts on the question? So here our workings is now going to happen in the reverse order. Let's first analyze the dividend plan, then I come to bonus plan. Working note 1, analysis of dividend plan. Analysis of dividend plan. Of dividend plan. Analysis of dividend plan. Of dividend plan. Maturity value is equal to investment amount plus profit made. Maturity value is equal to investment amount plus profit made. Plus profit made. How much is the investment done in the dividend plan? Dividend plan is that the table, I assume the first column is dividend plan, the second column is your bonus plan. So 9,20,000. Profit is 27,748.60 into 5 years. 5 years profit. 27,748.60 into 5. Tell me the final maturity value. 1058, 743. 10 lakh 58,743. Any doubts till this? Our approach ideally has been, you tell me to calculate 1058. I will do the calculation, but they're saying, no, no, I don't want you to do that. I'll give you the number. You do the reverse calculation. Closing units. Closing units is 1058 divided by the closing NAV. Closing units. Closing units 1058,743 divided by what is the closing NAV of this plan? Divide by 49. Divide by 49. 21,607 units. 21,607 units. This is the closing units. From this number, we will reverse work and get to the earlier number. Our format is going to remain same. Date, opening units, dividend rate, but you'll have to do 3 tables. Why 3 tables? You'll understand. Okay. First, open this date, opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, closing units. We have to do the reverse calculation. Reverse calculation can be little challenging also. It can become challenging because our mind is tuned to working this way. When you have to do the opposite way, it can become little challenging. 21,607 units. Any doubts first on 21,607? When is the last dividend paid by the organization? 31/3/2019. Last dividend 31/3/2019. This day opening units is assumed as A. Any alphabet X, Y, whatever you want to assume. Opening units is A. You can say even X, Y doesn't really matter. Okay. Opening units is A. What's the dividend percentage? Any face value given in the question? We will need a face value data because without face value, I cannot calculate the dividend in rupees. Without face value, I cannot calculate dividend in rupees. I'm assuming face value to be 10, which is what normally we do. Below the table, let us assume face value to be rupees 10. Face value to be rupees 10. My dividend in rupees is A, which is the number of units, into 10 into 15%. A into 10 into 15%. Number of units into the face value. Number of units into the face value into the dividend rate. If I change the face value, will answer change? Yes, answer will undergo a change. If you say face value is 15, 20, 100, my solution will undergo a change. I can't do anything because they should have ideally given a face value in the problem. This got tested twice in exam. Second time they gave the face value. They first time missed it. Second time they gave the face value. So here without face value I can't do anything. So I've assumed it to be 10 rupees. So A into 10 into 15%. 1.5A. On this date, there will be an NAV given in the question. Units allotted 1.5A divided by 45. 1.5A divided by 45. 1.5A divided by 45. Clear? Any doubts on this? Any doubts on this part? Now, right, A plus 1.5A by 45 is equal to 21,607, the number which you have calculated. A plus opening units plus the extra allotment. Opening units plus the extra allotment is equal to 21,607. I'll get answer to A. do a second table. I can do it in the same table also, but sometimes people may get confused. So I may have to do the table again. There, opening units will be again A. Opening units will be again A, and closing units is what you're going to calculate now. This is done. We are in 21,607. From there, we will come back and maybe we get 21,500 or 22, some number less than 21,607. We will keep going in the reverse order. Any doubts till this? Any doubts on this? Solve this now. Solve this and let me know what do you get as A. 45A plus 1.5A divided by 45 is 21,607. 20,910. 20,910 units. 20,910 units. Any doubts in this? I can try it in a single table also, but some students have found it a little difficult to grasp, so I don't want to do it. If you want to do in single table, you can do it. Any doubts first on 20,910 units? Any doubts on 20,910 units? Just to be on the safer side in the calculator. Any doubts on first 20,910? In the calculator, 20,910 into 10 rupees into 15%. This is the dividend. 20,910 into 10 rupees into 15%. Divide that by 45. Plus 2,910 plus 2,910 21,607. Can I do this for every time? It's up to you. If you are confident in your working, no need to do the checking. If you are not confident in your working, do checking again. Any doubts on this? Forward working, people don't make mistake. Reverse working, somewhere in your mind, you end up somewhere complicating things and that lead to errors. Any doubts on this calculation? Clear? This is 31/3/2019. Next, again a table. When is the dividend before this? Analysis on 31/3/2018. Analysis on 31/3/2018. Any doubts on 31/3/2019 calculation? Any doubts on this? 18, we will do it together. Next dividend, I'll do it in the screen. You will do it in your notebook. Okay. So next, let's repeat this again. 31/3/2018. If you are confident, after that the next row you can do it in the same table also. It's up to you. I don't want to do it because some students have found it little difficult in the past batch, so don't want to complicate. Date, opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, closing units. When we did forward working, it was very simple. Directly kept on writing, kept on getting the answer. The reverse calculations become little challenging. That is why we are doing, we will be doing around 50-60 reverse working questions out of the entire material. Any doubts till this? Opening units again A. What's the dividend rate? 10%. 10%. A into 10 into 10%. A into 10 into 10%. Dividend in rupees is what? A, na? A into 10 into, yeah. A. What's the reinvestment NAV? 50. Reinvestment NAV is 50. Units allotted is A by 50. Units allotted is A divided by 50. Anywhere you need extra explanation, you will have to tell me, okay? Units allotted is A divided by 50. A divided by 50. A plus A by 50. A plus A by 50 is equal to 20,910, number which you have calculated. 20,910. 20,910. A divided by A plus 50. 20910. You will have to solve this, get answer to A, which some of the live online students have typed. A equal to, any doubts on this? Any doubts on 2500 units? Next analysis you do in your notebook. I'm doing it in the screen. Don't see the screen, okay? You do it in your notebook. Any doubts on 20,500? Anybody needs any explanation? Anything to be explained again? You want to cut down on the speed? Anything you want, please tell me now itself, okay? Any doubts on 2500? Do the next analysis. 2017. How much you said? A is equal to 20,000. 20,000 units. Clear? Any doubts on this? Now, if at all you want to cross check your answer, then you'll have to move in the forward direction. You can move from 20,000 to the last one also, or it's up to you. Any doubts on this? Can we proceed? Below this, finally, issue price is equal to. Any doubts on 20,000 units? Issue price is equal to, what is the amount we invested? Divided by 20,000. Rupees 6. Any doubts on this? Can you proceed? Clear? Okay, this was my dividend plan. For bonus plan, our table is going to be like this: date, opening units, bonus ratio, bonus units, and closing units. This is what we are going to do. The closing units is going to be computed with the investment and the yield figure. With the investment and the yield figure. What is yield is? They have given in percentage. Other one they gave it in rupees. Rupees we multiplied with 5 years. Percentage also we are going to do something. Any doubts till this first? Next, analysis of bonus plan. Analysis of bonus plan. I think a live online student has already completed bonus plan. That's okay. Analysis of bonus plan. Maturity value is equal to investment plus profit. Maturity value is equal to investment plus profit. Investment plus profit. How much is the investment made? 10 lakh plus 10 lakh plus profit. They have said 6.40 percentage. No problem with the percentage, and the word used is average. Average means yearly. So my profit is 10 lakh into this percentage into 5 years. 10 lakh into the percentage into 5 years, into the percentage to convert into rupee terms, and then multiply with 5 years. Other plan they directly said, I'm giving you the rupee value, you directly go ahead with the answer. So 10 lakh into 6.4% into 5 years. 13 lakh 20,000. No, it's so. Again, I'm repeating, we never follow IRR approach. So his doubt is, can't we do compounding on this? We never follow IRR approach unless there are specific indications in the question. Last problem has indication. Otherwise, IRR approach is never followed by us. So compounding means you'll have to do into 1 plus 6.4% power 5. That will obviously give a different answer. Power 5 will give a different answer. If at all they say average yield 6.4% in bracket IRR, then that's a different story. Any doubts on this? Yep. Closing units 13 lakh 20 divided 13 lakh 20 divided by what was the closing NAV? 44. Any doubts on this? Clear? Okay. Now listen for 2 minutes. I'm not sure whether you will get the answer or you may not get the answer. That's okay. You need to do this table: date, opening units, bonus ratio, bonus units, closing, reverse direction. First one, assume opening as A, bonus ratio is there, extra units will be allotted, closing is A plus something is equal to this. You will get one. Totally two bonuses are there. I'm giving you time to try. Even if you don't get, I'm okay with it. I'll anyway do detailed calculation, but after 5 minutes. I'll do the detailed calculation after 5 minutes. You spend 5 minutes, you get the answer, okay. You don't get the answer, also don't worry about it. 5 minutes for you to try now. Okay, I start discussing it. When I went through rounds, I've seen students doing it in different ways. As long as you get your answer, doesn't really matter. Some did not even try the table approach. They directly said x plus something, perfectly fine. Somebody did both the workings in a single table. What a single table is, they started the opening as A, they added the first bonus, then they took the second same number and added another bonus and directly got the answer for the first one. Whichever way you present doesn't really matter, as long as the other guy understands it. Your presentation should be clear to the other party. That is what is critical, because many students ask me, what should I do for presentation? In class, I try to standardize the presentation. Reason is very simple, so that it is understandable by everyone. Your wish. If I am solving this answer in an exam, I will not do the table itself. I'll directly write A plus something and then get the answer. Even for dividend reinvestment, I wouldn't have done a table, just to save time. It is just to save time. So coming back to the calculation here, date, opening units, bonus ratio, bonus units, closing units. Our last bonus was on 31/12/2018. Assume this as A. Bonus ratio is 1 is to 5. 0.2 A. A into 1 by 5. A into 1 by 5. A plus 0.2 A is equal to 30,000. A is equal to 25,000. This is on 31/12/2018. 31/12/2018. Same table, I'm repeating the earlier bonus. The bonus before this was 31/12/2016. Again, I take it as A. Ratio given is 1 is to 4. So A into 1 by 4. A into 1 by 4.25 A. A plus equal to 25,000. A is equal to 20,000. I'll explain again in case somebody has not done it. It's okay even if you have not got the answer. I have no problem with that. Only thing I want is you to give it a try. So I've assumed the opening units as A. Last bonus, you'll have to go in the reverse direction only. A bonus ratio 1 is to 5. 1 is to 5 is A into 1 by 5.2 A. A plus 0.2 A is equal to 30,000. A is equal to 25,000. We repeat the earlier bonus, we get 20,000. Any doubts on this? Any doubts on the calculation here? Can we proceed? Issue price is equal to investment divided by 20,000. Investment divided by 20,000 units. We started with 20,000 units. What is the investment figure? 10 lakh divided by 20,000. The issue price is 50 per unit. Any doubts on this? Any doubts on the calculation here? Clear? Can we proceed? Any doubts on the computation here? Done. Little different question. I give you a minute. Go through the entire solution. In case there are doubts anywhere, let me know, and you can do your marking also. 2 minutes, 1 or 2 minutes for you. Okay. The first segment of the chapter is almost over. See, how I normally do is I split the chapter into multiple segments. Here we have three segments. Part 1 MF return, part 2 is on NAV calculation. Part 1 is almost done, but still we will do few more questions to just get more grip. Any doubts till now in any of the parts? Done. Let's go through question 9 now, which is little different. I'll explain the question. Let's go through this. XYZ plan hedge fund currently has assets of rupees 20 crore. Mr. A, the manager of the fund, charges fees of 0.1% of portfolio asset. In addition, he charges an incentive fee of 2%. The incentive will be linked to gross return each year in excess of the portfolio maximum value since inception of the fund. Maximum value of the fund achieved so far since inception is 21 CR. Benchmark return, fee payable 29 4.5 minus 1.8. Go through the question. You don't even know the concept, but just visualize what we are going to do. And anyway, I'll explain in detail. Go through the question. I give you maybe 1 minute. Okay, let's understand the question and then we start doing it. XYZ plan, a hedge fund currently has assets of 20 CR. A hedge fund is not like a mutual fund, it is a little variant of that. When I invest, I have options like equity, bonds, cryptos, fixed deposit. One of the categories is a hedge fund where I can invest as an investor. This hedge fund has asset of 20 crore. Asset of 20 crore means it has collected money from people, and the collected money is 20 CR as of now. This fund has collected money from so many investors. Mr. A, the manager, I am the fund manager. The fees which I collect depends on two factors they have mentioned. Charges how much? 0.1% of the portfolio asset. So whatever is the portfolio asset, I will charge 0.1% as my income. 20 CR into 0.1%. Whether I perform well or I don't perform, I want 0.1% fixed fees. 20 CR into 0.1. In addition, I am going to charge an incentive fee of how much? The fixed fee is only 0.1%, but the incentive fee is huge, 2%. But this is on a little different amount. The incentive fee will be linked to the return each year in excess of what? Portfolio maximum value since the inception of the fund. So from the day one, this fund which has been going on, I find out what is the maximum value. If I go beyond that maximum value, I need extra incentive to be paid. The maximum value till now has been 21 crore. So today we are at 20. Moment 20 becomes 21, I will now start being eligible for a variable incentive. I'll become eligible for a variable incentive. I'm getting two fees. One is a fixed fees and second is a variable fees, and which is what practical world something called as a portfolio management service does. PMS is a service which is given which does this. All these terms you'll understand as you proceed. So here 20 CR is my asset value. If I bring it to 21, 20 becoming 21 is how much increase? 5% increase. That is the benchmark return to make Mr. A eligible for incentive fee. 20, if it touches 21, 21 minus 20 divided by 20. We'll do the calculation in some time. 21 minus 20 divided by 20. Moment I go beyond 5%, I'll get variable fee, fixed fee. Below 5%. Only the fixed fee. Only the fixed fee. What is fixed fee? 0.1% of the asset. Now, this 0.1% of the asset can be interpreted in multiple ways. It can be interpreted that it is 0.1% of asset at the beginning of the year. What is beginning of the year? 20 CR. Or it can be interpreted as asset at the end of the year. Ideally, most of the times in the practical world, it is on the beginning of the year value, because you gave me this value. On this, you pay me 0.1%. Next year, if 20 has become 25, I'll say if you want, you withdraw the money. You don't want to withdraw, then I will charge 0.1 on 25 next year. Next year, I'll charge it on 25, 30, 35, whatever is the value. Let's write benchmark return. Benchmark return to be eligible, to be eligible for incentive fee. Benchmark return to be eligible for incentive fee is equal to max value, max value minus today value, maximum value minus today value divided by today value. Max value minus today value divided by today value into 100. What's the maximum value given in the question? 21. What is today value? 20 divided by today value. If I touch this 5%, I am telling my customers or clients that I will charge 0.1% and also a variable fee. Also a variable fee. Situation 1. How much is the return earned? Return earned 29%. Return earned 29%. Fee payable split into 2. In exam, no need to do chart approach and all. In class, I'll keep doing charts. In exam, it's up to you. How you want to present, it's all up to you. Printed answer will always be tables. Class, many times I'll do charts. Okay. Fee payable split into 2. Fixed, variable. Fixed and variable. Fixed is 20 crore into 0.1%. 20 crore into 0.1%. 20 crore into 0.1%. How much? There's a doubt on what does a hedge fund mean. You will understand this at later point of time. But it is like one of the investment avenue for an investor. You can invest in mutual funds. A variant of that is a hedge fund. It is a place where people can invest. Just understand for the time being that alone. 20 crore into 0.1%, 2 lakh. Variable part, value achieved. Value achieved. What is the return there? 20 plus 29%. 20 plus 29%. 25.8 crore. 25.8 crore. Value in excess of 21 CR. The incentive is if you touch beyond 21, if you go beyond 21, the wordings in the question are just 0.1. In addition, incentive is 2%. Incentive will be linked to gross return each year in excess of the portfolio maximum value since inception of the fund. Moment you go beyond 21 CR, on that extra value, I want to charge 2%. On the extra value, I want to charge 2%. In excess of 21 CR is 4.8 crore. Variable fees. On this 4.8, what percentage? 2%, which is, and put together this guy will charge 11 lakh 60 from their investor. Investors have to pay 11 lakh 60. Investor has to pay 11 lakh 60. Any doubts on this? Clear? Other scenarios, directly only fixed fees, because you are not going beyond 5%. If you don't go beyond 5%, only 2 lakh rupees, 2 lakh rupees. If you are not going beyond 5%, you will get only fixed fee. Fixed fee is 2 lakh. So next situation, fixed fee. Fixed fee 2 lakh. Last situation, again fixed fee. Fixed fee is 2 lakh. Fixed fees is rupees 2 lakh. Any doubts on this? Clear? Not very critical type of a question, not very tricky and all, but still it's there in the study mat and it has come once in exam till now. Any doubts on this? Can we proceed? Clear? Okay, I'll now go to the next concept. Front end load and back end load. We did one question, there was a word called no load fund. That time I had said I'll explain this little later. Let's now understand what is this. Whenever a person buys a mutual fund, I want to buy MF of 10,000 rupees. The fund manager or the mutual fund may ask to pay me 10,100 rupees. I want to buy only 10,000 rupees mutual fund. He may charge extra 100 rupees. He may charge extra 100 rupees and call it as documentation charges or other charges and collect extra. That collecting extra is called front end load. Front end load means I collect extra from you. NAV 10 rupees, but I'll collect 10.05. NAV is 10 rupees, but I'll collect 10.05. In India, front end load or entry load was abolished in the year 2008-9 itself. In the year 2008-9, AMFI has abolished the concept of front end load. What is front end load is when you're entering into the mutual fund, 10 rupees, but you have to pay 10.05 extra. That extra whatever you are paying is called as the front end load. Extra whatever. Public offer price. Public offer price. Let's ignore the formula. 10 rupees. I have to pay 10.2. Extra 0.2 on a base of 10 rupees. Extra 0.2 on a base of 10 rupees. On a base of NAV is 10, but I'm asked to pay how much? 10.2, 10.3, 10.4, something extra you have to pay. Whatever you pay extra on the day you enter is called front end load. This used to exist in India before 2008-9. Then they abolished this, saying that you cannot collect any front end load. Then there's something called as back end load or exit load. When you enter, you pay extra. When you exit, you get little lesser. You get little lesser. NAV 20 rupees. But I will not give you 20 rupees when you redeem. Instead of 20 rupees NAV, I'll give you 19.5. I'll only give you 19.5. 20 minus 19.5 on a base of 20. On a base of 20 is called back end load or exit load. Exit load still exists in India. It still exists in India. Most of the mutual funds will say if you exit within a year, we will charge you 1% exit load. Most of the funds. If you exit after a year, they will not charge exit load. They will not charge exit load. Exit load still exists in India. What is exit load is? NAV is 20 rupees, but redemption will not happen at 20. Redemption will happen at little lesser than 20. Little lesser than 20. NAV 20 rupees, but your public offer price is 20.5 or 21 or 21.5. Pay extra on entry. Whatever extra you pay, if you write it in rupee terms, that answer is in rupees. You divide by the NAV, that becomes percentage. That becomes percentage. On entry, pay extra. On exit, collect lesser. Collect lesser. Any doubts on the concept here? Let's go through this question now. The unit price of a ELSS scheme, equity linked savings scheme of a mutual fund is rupees 10. Public offer price is 10.204. Redemption price is 9.80. Public offer price 10.204. Redemption price 9.80. Front end load, back end load. Front end load is equal to front end load is equal to, not much to read also, okay. Front end load is equal to public offer price, public offer price minus NAV divided by NAV into 100. Public offer price was a public offer price minus 10 divided by 10 into 100. Point. Wait for a minute. Any doubts on front end load? IC has given two answers. Both will vary, but they have given two answers saying that you can do it this way also. Any doubts first on 2.04? This I feel is a better answer, but other answer is, when you want to convert into percentage, you can also divide by 10.204. You can also divide by 10.204 when you calculate your profit margin. What is the formula for profit margin? Gross profit by sales, net profit by sales. But I can also say net profit by cost. So your GP margin or your profit can be on sales, profit can be on cost. Similarly here, that extra amount can be calculated as a percentage of 10 or as a percentage of 10.204. Both will obviously give a different answer. Your profit margin, like you can do it on, question will say profit margin 10%. Then you understand it is 10% on sales. Or if they say 10% on cost, it can be on sales, it can be on cost. Similar logic, lot of places, this is just a concept at lot of places. Whenever you convert something into percentage, you will subtract A minus B. A is one value, B is one value. The denominator can be A, the denominator can also be B, and accordingly the percentage will change. You can keep the denominator as 10.204, you can keep the denominator as 10, and obviously both will give different answer. This ideally you write 2.04 percentage of NAV. Like profit margin can be on sales, can be on cost. This is ideally, final logical answer is 2.04% of NAV. Can you divide this and tell me the other answer? 2% of public offer price. 2% of public offer price. It can be on public offer price. It can be on this. In exam, one answer is sufficient. Okay, they have given both in the solution. They are saying you can divide by 10. You can also divide by 10.204. It is the way you present it. Profit margin, if somebody asks, I'll want to divide by sales. But many problems you would have done in costing or FM, where instead of dividing by sales, they'll divide by cost and give you the profit margin on cost. What is profit? Sales minus cost. After that, you can divide by sales, you can divide by cost. So any formula where you do A minus B, A minus B can be anything, okay? When you subtract it, the denominator can be A, the denominator can also be B, and accordingly, whenever we write percentage, ideally you should expand it and say 2.04 percentage of something, 2% of something. Any doubts on this? Next, exit load. Back end load, back end load, back end load, NAV minus redemption price divided by NAV. NAV minus redemption price divided by NAV. How much is the NAV? 10. Redemption price divided by 10 into 100. 2% of NAV. Do the other answer. Do the other answer where you divide by redemption price. Which is right? Both are logically okay. Both are technically okay. I am more in favor of the first formula, which is on NAV. Like profit margin can be on sales, can be on cost, but most of the time it will be on sales. So you can argue any of that. Divided by 9.8. Tell me the answer. 2.04%. This percentage is 2.042 matching and all is coincidence. Okay, it's not mandatory that both have to match like this. It is more of coincidence. The figures have been given in such a manner that you get 2.042 and here you get 2 and 2.04. That's more of coincidence. Any doubts on this? Clear? In exam, either do everything on NAV or do everything on public offer price and redemption price. It's your wish. You want to present both, you present it. Any doubts on this question? Clear? Can we proceed? You can put the tick around that question. Okay. Okay. Go through question 11. You first read it, then we will read it together and then I'll explain. You go through 11 first. Okay. I'll start reading it. I'll explain and then in between I'll take a break and then get the answer. Asset management company of the MF has declared a dividend of 9.98% on the units under dividend reinvestment plan for the year ended 31st March 2021. Investor issued additional units for the dividend at the rate of closing NAV for the year as per the conditions of the scheme. So extra units got allotted. Closing NAV was 24.95. An investor who is having 20,800 at the year end. At the year end, he has 20,800, has made an investment before the declaration of the dividend at the rate of opening NAV plus an entry load of 0.04. So when I entered, I paid opening NAV and extra 0.04. At the close, I have 20,800. Obviously, at the beginning, it could be lesser than 20,800 because of dividend reinvestment plan. NAV has appreciated by 25% during the year. Assume the face value to be 10 rupees. Opening NAV shall be, units purchased shall be, original amount of investment shall be, and some two theory oriented question. In that fourth, you will be able to answer. Fifth, I'll give you the answer, but I'll explain later. Fifth part, I'll have to do MF performance evaluation. Now, three things. This is how your case scenario question will come in exam. This is exactly what they do in case scenario. So when they do this in case scenario, students think MCQ needs separate preparation. No, you cannot prepare separately for MCQ. How can you prepare separately for MCQ? Because the same question came in September 25 exam as a descriptive problem. It came as a same question with two extra adjustment they added, but they made it as a descriptive question. Now the same question they suddenly will make it as an MCQ question. The last problem which we saw, again I can make it as an MCQ question. Or the previous to previous problem, this reverse working question, I can ask you question, what will be the number of units under dividend plan on this date? Four options are given. What will be the number of units on this date under dividend plan? Again, all the answers are there in your notebook. So many students think MCQ needs separate preparation. No, MCQ doesn't need separate preparation. You cannot prepare separately. You cannot prepare separately. MCQ is part of descriptive only. Earlier, I was never adding any MCQ case scenario in the questions. I always have a separate section in the end. But now at few places I've added a question just to give you a feeler saying that no, I don't need a separate preparation. Second, we have a lot of MCQ in the concept book. People think that is for MCQ purpose. No, that is not for MCQ purpose. Those concept MCQ will not help you in your MCQ. It will help in MCQ as well as descriptive. It is going to help you in both those purposes. You read a concept, lot of people understand better after reading the see an example. That is the only reason I've added those examples below. Otherwise I would have just given the concept and questions would be done here. So those examples given in the concept book, we'll have around 300 MCQs there, but those 300 MCQs are like 300 proper descriptive questions. They are like 300 proper descriptive question. If at home you would have done those 2 3 examples, you would have felt the most. Some of the MCQs could be even more difficult than our descriptive because I have framed them. So I would have added a lot of complexity if needed. So point is, MCQ doesn't need separate preparation. Just a classic example, same question has come in the recent exam. It came in the September 25 exam with 3 requirements you see, but they added something else also, something called as a real return, which is learnt in Forex chapter. So they clubbed something extra there, but the same question has come as a descriptive question. Same question can come. Only good part about MCQ question is I need not worry about 2 decimal, 3 decimal, ICI assumption, my assumption. All that headache gets removed. That is the only benefit of MCQ. Internationally, most of the courses work with MCQ approach. So it is descriptive is rarely followed. CFA entirely MCQ based. The focus is on multiple choice question because MCQ is the best way of testing your concept clarity. But only thing I want to tell you is there is no separate preparation needed for multiple choice question, because when you go to the revision phase, suddenly that time you will speak with your friends. Maybe some other faculty gives you a big book on MCQ saying that you do all these MCQ. Till now, none of the exam ICI has repeated MCQs. None of the exam they've repeated. I have seen 4 papers till now. None of the questions were repeated, but everything were concept oriented. It was not difficult, but everything was descriptive. Out of the 6 question, 4 question will be repeated only. 4 and a half question will be repeated. MCQs rarely repeated in exam. So MCQs doing 1,000 question also will not serve any purpose because same question will not be repeated. Till now, at least I have not seen. MTPs, RTPs they may repeat, but exam question, you open the exam question, you will not see any repetition of the question. But yes, somewhere concepts will be there. Same concepts will get tested there. Clear? Done. So here, this is a dividend reinvestment plan. I have my closing. I have to do some reverse working. Extra layer of difficulty they have added is front end load or an entry load. What happens to that we will see. Clear? Okay, let's take a break and then resume. 10 minutes break. Okay, let's continue with the discussion. So here on closing, I have 20,800 units. Opening, I'll have to get back to the number of units. We will put it in the table format. We will get to the opening units. In the table format, you will get the opening units. 20,800 is the closing. Opening, we will take it as A. Dividend percentage is given in the question. Dividend in rupees is calculated, and these have been reinvested according to the question, have been reinvested at the rate of what? Closing net asset value. At the rate of closing net asset value, which means by the end of the year. By the end of the year, we got this detail. Declared a dividend of 9.98% on the units under dividend reinvestment plan. Investors are issued additional units at the rate of closing NAV for the year as per the conditions of the scheme. Closing NAV is 24.95. Closing NAV is 24.95, and I am having 20,800 units at the year end. Working note 1, computation of opening units. Computation of opening units. Opening units. Date, opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, closing units. Date, opening units, dividend rate. Live online guys, is the screen blurred? Can somebody confirm please? Just give me a minute. Okay. Date, opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, and closing NAV. The reinvestment happened on the last day as per the question, as per the closing NAV, 31/3, 2021, 31/3, 2021. Opening units A, opening units A, 9.98%, 9.98%. A into is the face value given into 9.98%. So I was saying in one exam question, when they asked again, they ended up giving the face value A into 10 into 9.98%. 0.998A, I think. Check it, okay? 0.998A. This reinvestment happened at the closing NAV. The reinvestment happened at the closing NAV. What is the closing NAV? 24.95. Now listen. There is an assumption needed here, which they have taken 24.95, but an alternate logic is whenever a reinvestment happens, it is like a fresh buying for me. It is like a fresh buying for me. So I could be asked to pay 24.95 plus again an entry load of 0.04. I may be asked. It depends on the scenario. In India's context, though, this doesn't even exist. There's no concept of entry load. The reinvestment ICA has assumed to take it as 24.95. Otherwise, it can be 24.99. It can be 24.99. What is 24.99? Extra 0.04 entry load. Extra 0.04 entry load. Reinvestment is nothing but a fresh purchase made by us. It is like a fresh purchase. Instead of giving you dividend in rupees, I give you dividend, you give me back dividend. You give me back dividend, and I allot you units. So reinvestment NAV 24.95 can be 24.99 also. It can be 24.99. You can debate on 24.99 as well. Units allotted 0.998A divided by 24.95. A plus this is equal to A plus 0.998A divided by 24.95 is equal to how much? 0.998 divided by 24.95 is 0.04. It is 0.04. A is equal to 20,000 units. A is equal to 20,000 units. Any doubts on this? A is equal to 20,000 units. Clear? This could be one of the MCQ in the requirements. Any doubts on 20,000 units? Clear? Can we proceed? They've also asked me for opening NAV. What can help me in calculating opening NAV? Something is there. Closing NAV? NAV has appreciated by 25% during the year. NAV has appreciated by 25% during the year. We did one question earlier where we got the units, divided that and got the investment divided by this, got the issue price. Here investment is one of the requirement. Original amount of investment shall be. Now right, opening NAV plus opening NAV plus 25% of opening NAV is equal to closing NAV. 25% increase. Opening NAV plus 25% of opening NAV plus 25% of opening NAV is closing NAV. This will give you opening NAV. $19.96. Any doubts on this? Opening NAV is 19.96 per unit. Clear? Any doubts on this? Below this, amount invested is equal to 20,000 units into, you'll have to pay extra 0.04 entry load, extra 0.04, 19.96. Some of the concepts like entry load, why they are still repeated in our material? Because we are learning this not from India's context, it is more from an international context. So some other country can have the concept of entry load. 19.96 plus 0.04, what's the amount? 4 lakhs. Any doubts on 4 lakh rupees? Clear? Now let's answer the MCQs. Opening NAV is how much? Which of this answer? 19.96. Opening NAV is 19.96. Number of units purchased is 20,000. Now this is what is case scenario based MCQ. Now how different it is from our normal question? Nothing different. It is, the only good part is in a normal question you don't have 4 choices. So if you make any calculation errors, it may not get caught at that time. In an MCQ, because of the 4 choices, if you made a calculation error, you may be able to spot your mistake. Question 4, think and tell me which is right answer. This you know. Think and tell me which can be the right answer. Which can be the right answer? Think about it. Okay. Now, whenever question comes in MCQ, first thing we will do is read it and see if we can eliminate any choices. What is elimination of choices? It includes advisory fees, travel costs, registrar fees, custodian fees. This is logical. This is very logical because I've told you it includes rent, electricity, your traveling expenses, everything is included. So this is a correct point. This is a correct point. Because of this, which of the following statements are what? Incorrect. Which of the following statements are incorrect? This option is eliminated. This option is eliminated. 1, 2 and 3 answer is not possible. 1, 2 and 3 answer is not possible. In MCQ, try an elimination route in case you are not able to directly get to the answer. So 1, 2 and 3 choices eliminated. Left over is 1 and 3, only 3, only 1. If that is the point, I should not even read that fourth choice. I should not even read the fourth option. I should not even read the fourth option. I don't know why they gave that fourth option, just to waste our time. Because in the option, they are saying 1 and 3, only 3, only 1, 4 is nowhere in the choice. So I don't even want to read, and this is a right statement. High expense ratio can undermine the performance. That is, if expense ratio goes up, your performance will go down or the return for the investor will go down. It includes brokerage cost for trading of portfolio. It is the percentage of income that were spent to run a mutual fund. Now I need to decide whether both are incorrect or one of them is incorrect. Whether both are incorrect or one of them is incorrect. In the SEBI definition, expense ratio, they have given a lot of things. In that, this brokerage cost normally is considered not as part of the expense ratio. It is considered as part of that purchase price and selling price. They calculate the difference. No, there in the profit or loss, it is automatically adjusted. So whatever profits I make, from the profits or from the asset, I have to spend money. So normally brokerage cost is not considered as part of the expense ratio. Why not considered? 2 days back, I received a message from one of my mutual funds saying that expense ratio is getting revised from 0.78% to 0.80%. This was a message I got. 0.78 is becoming 0.80. So they track this number significantly. SEBI doesn't allow you to do. So one of the routine expenses, brokerage expense. So this brokerage expense, they are saying, let's not separately put it in the P&L. Consider it as part of the purchase cost and consider it as part of the selling cost. That is, if you are buying something, it will get capitalized. It will technically get capitalized. And if you are selling something, it will automatically get deducted from the sales. So this part, your ICI answer says only 3, but I have corrected the answer. I'll explain you this, the solution. First is brokerage cost. Brokerage cost is wrong. Brokerage cost is not part of expense ratio. What is part of expense ratio? My fees, if I am the fund manager, electricity expenses, all these expenses are part of expense ratio. Second thing they said, it is the percentage of income that were spent to run a mutual fund. Technically, expense ratio is calculated not as a percentage of income. If income is 100 rupees, I need not spend 0.78. If asset is 100 rupees, what is asset? I gave you 100. On that 100, you can spend 0.78 or 0.80 on the asset, not on the income. It is not on the income, it is on the asset. So ideal answer is 1 and 3 both are incorrect. 1 and 3 both are incorrect. It is the percentage of asset. It is the percentage of asset. So I have rectified the answer. There is an error. I have dropped a mail to ICI on this, but they have not responded to this. So it is the percentage of income is wrong. It is the percentage of what? It is the percentage of asset. It is the percentage of asset. Expense ratio formula you learn in the same chapter. Expense ratio formula is expenses per unit divided by NAV per unit. Expenses per unit divided by NAV. NAV is the asset value per unit. NAV is the asset value per unit, because it can't be on income. There are years where mutual fund has generated negative income. They have generated negative income. In those time also, there are expenses incurred by the mutual fund. So even if you generate negative, if I'm earning -5, it will become -6 for you, because expense ratio will be added on top of it. Expense ratio on top of it. I cannot bear the expense ratio at my side. Okay, -5 will become -6. So real answer is this. ICI answer says only 3. Expense ratio is the percentage of asset. It is the percentage of asset that were spent to run a mutual fund scheme. That were spent to run a mutual fund scheme. Expense ratio generally covers admin expenses, management expenses, advertising, operational fees. Everything is included, but it does not include the brokerage cost. Brokerage cost is added to the asset value, and when you sell it, it is automatically deducted from the sales. Separately, they will not show, saying that two brokerage expenses. They will not want to show it separately, because it is not part of the your P&L disclosure and all. I'm not bothered. Calculation side, expense ratio calculation side, they will not consider brokerage cost as part of the ratio. Reason, SEBI has a lot of control. If you want, you just read about SEBI limits on the expense ratio. There are limits for different category of mutual fund. Otherwise, a fund manager may pay himself extra, may pay high salaries, may do all this random things. They don't want all this to happen. 2 days back only, I got this message, because 0.78 was revised to 0.80, a small increase only, but still they had dropped a message saying that expense ratio is increasing for your fund from 0.78 to 0.80. You don't like such funds, you exit out of the fund. If you don't like, you can exit at any time, you can entry at any time. So that is anyway allowed. Clear? Any doubts on this? Last item is called Sortino ratio. You will not understand now, so let's not spend time on that now. Any doubts on this? With this, our segment 1 of the chapter is over. The segment 1 is over. As I have said, few places I have given you time to do the marking. Few places I may not give you time. If you find time in the class, do the marking at least quickly. Easy, moderate, difficult. Writing extra notes, up to you. After the class, I have told you I want you to give me 1 hour. In that 1 hour, 5-10 minutes going through the question and doing your notes. Again, I'm repeating, notes will become extremely handy later on. Your own notes. Again, I'm repeating, it's your own notes which is critical, not my notes. My notes is concept book. So at home, that 5-10 minutes if you give, it will become extremely easy later on. That only 5-10 minutes, not much. 5-10 minutes, it will become extremely easy later on. Any doubts on this? Clear? I'll be now moving to the second segment. First segment is done. We have a second segment. We have a third segment. Third segment will be done after one other chapter is over. Once I complete the 2 segments, I'll revise the entire chapter. Any doubts till this? Clear? Okay. Second segment focuses on an area called calculation of net asset value. Now, we have been using this term net asset value at so many places. We saw a lot of questions where the term NAV was used. In the second segment of the chapter, I may ask you to calculate return, but for calculating return, I will not give you NAV1. I will not give you NAV1. Your job is to compute NAV1. You have to compute NAV1 and then calculate the return. It's not that I'm going to do something different now. It's almost the same thing, but we will not give you NAV1. You have to calculate NAV1. Let's understand what is this. First, let's understand a situation where asset and liability details available. Second situation, I'll explain later. Okay. What is NAV? NAV is the fair value per unit of mutual fund. Practical world, every day around 11 p.m., every mutual fund releases their NAV. Every mutual fund releases the NAV around 11 p.m., 11:30, whatever time, but they release daily NAV. Daily NAV is reported by mutual fund. What does NAV is? Value of all asset minus value of all liability divided by number of units. Value of all asset, value of all liability. No, your concept of your books of accounts doesn't work here. Value of all asset means fair value or today's value. What is today's value? If you purchase some share, go to the stock market, find the share price of ICICI Bank, find the share price of HDFC Bank, number of shares into the share price, put a total, get value of all asset, deduct value of liability. What is value of liability? You can have some salaries payable, you can have some rent payable. That also every day you have to do accrual. Every day you have to do accrual and keep adding the values. So that and all, the fund manager will create a structure. There will be a system. In the system, automatically numbers will flow from the practical world. Numbers flow automatically. NAV will be calculated. Someone may verify it and then it is released. Maybe in future you could be working in this department also, saying that where you need to do the daily reporting of NAV, where your accounting knowledge is somewhere needed, analytical knowledge is needed. Both put together, you end up computing the NAV. Our system computes the NAV. Your work is to calculate. There are debt mutual fund. What does debt mutual fund do? It invests in debt. Debt means it invests in some fixed deposit, it invests in government security, it invests in bonds. Their income will be accrued on a everyday basis. Income will be accrued on everyday basis. Expense will be accrued on everyday basis, and then you will do the valuation. So here, value of all asset, asset of a mutual fund includes equity investment. Equity investment, if it's listed, number of shares into whatever is the share price in the market. Most of it will be listed only. They don't invest in unlisted company. If it's unlisted, then you have to find a fair value. You can invest in debt investment. Debt investment means you can invest in some bonds, commercial paper, fixed deposit, government bonds. All this, if it's listed, there'll be a price. If it's not listed, whatever price you paid, and you will keep adding something called as accrued interest. You would have learnt a concept called X interest and cum interest in investment accounting. You could have done this in your accounting standard. There's something called as X interest and cum interest. To put it very simply, whatever is the value, you will keep adding accrued interest on a daily basis. On a daily basis, you may invest in money market instrument. Money market instrument are less than a year instrument. Less than a year instrument. They are also debt instrument. You can have some cash balance, you can have some receivable, you can have some other asset. Logic is very simple. All assets you have to consider at their fair value. No concept of your books of accounts saying that in your books of accounts we follow cost, market price, whichever is lower. Investment accounting says something. None of that. I will go through fair value approach. Fair value means find out what is the real value. Everyday basis NAV changes. Today, if Nifty falls, some index falls by 11 p.m., if you check the NAV would have fallen. If 11 p.m. they don't report, next day morning, if you check the NAV will fall. Next day, stock market goes up, NAV will go up. Again, NAV will go down, NAV will go up. It is a continuous exercise. So you need to add up what? All the asset value, deduct all the liability. What can be the liability? some outstanding expenses, amount payable on share, other payable, all these will be there. Add up all asset, deduct all liability, divide by number of units. Number of units. There is a term, this because students have got confused, I'm explaining this. Unit of mutual fund versus share of company. Unit of mutual fund versus share of company. When you buy TCS, you are allotted number of share, and number of share is a fixed number that can't change. If a company has issued 1 lakh share, it will continue to be 1 lakh. In mutual fund, the units can change on a daily basis. The units can change on a daily basis. Reason is somebody else enters and somebody exits. Person can enter anytime, person can exit anytime. If the MF doesn't want this headache of entry exit, they will introduce a close-ended scheme. They'll introduce a close-ended scheme where they don't want this headache of people coming suddenly in between, suddenly going out. Otherwise, in an open-ended firm, units can keep increasing, units can keep decreasing. Another important point, for calculating NAV, the denominator will always be number of units. It has no link, it has no link with the number of shares held by the mutual fund. Many people suddenly confuse saying that mutual fund is holding A, B, C, D. I'll add the shares and say number of units. There's no link. Number of units is different, number of shares is different. This many students have made mistake in exam also, and they somewhere confuse it. Units is different, shares is different. Shares is the asset of the mutual fund, units is the liability of the mutual fund. It will come in the liability side in the balance sheet. In the balance sheet, they'll call it as equity capital. Whatever you are giving, it is part of the liability side of the balance sheet. So units and number of shares has no linkage. Clear? Any doubts on this? Units and number of shares has no linkage. How will we calculate NAV? Add up all the asset values. Add up all the asset value. How will you add up? Fair value. Fair value. What is fair value? The real value of the asset. Data there in the question to calculate real value, calculate it. Data not there, take the cost price and go ahead. That's all. If data is not there, I'll copy paste the cost price. Any doubts on this? Any doubts on this? There's a second formula which I'll explain later. Okay. First formula is, if you have asset details, if you have liability details, what will I do? Add up all the asset. Add up all the asset. Deduct all liabilities. Whatever liabilities are there in the question, divide by number of units. Things, asset can change on daily basis, liability can change on daily basis, number of units can change on daily basis, and obviously NAV will change on daily basis. NAV will be released on every working day, or technically every trading day. Every trading day, not even working day, every trading day. If trade is not there in the market, that day NAV is not declared by the MF. MF is not going to issue the NAV. Every trading day they will declare the NAV. Any doubts till this? And our work could be that a question may ask you to calculate return. They'll say you invested. By the end of the year, all this has happened. Calculate NAV. But my struggle, the struggle which I face now is for calculating NAV, for calculating the return, I need the NAV, which is where the second segment. Clear? Any doubts till this? The second segment focuses again on return calculation only, but return calculation is done by first calculating the NAV and then calculating the return. Some question may stop with NAV, some question may even ask you to calculate return. Any doubts on the concept here? Let's go through a question. Let's come to question 12, a fairly simple, straightforward question just to get started with. Cinderella Mutual Fund has the following asset in scheme Rudolph at the close of business on 31st March 2014. Company, number of shares, market price per share. Total number of units are 10 lakh. It has accrued expense of 2 lakh 50, other liability of 2 lakh. Calculate the NAV per unit of scheme Rudolph. Nothing much for you to go through, but anyway, I give you 30 seconds. Go through the question. 30 seconds. Okay. We are required to compute NAV. There are various assets. I've invested in 4 companies. I know the number of share. I know the market price. Number of shares, if you put a total number, it will not match with number of units. It will not match with number of units. I'm again repeating this. Reason is some students have confused and made mistake. There's no link between number of shares and number of units. No link between number of share and number of units. Working note 1, computation of NAV. Computation of NAV. Particulars calculation amount. Particulars calculation amount. First is market value of assets. Market value of assets. Market value of assets. We have various assets given in the question. First is 4 shares are there. Apart from shares, there can be other things like even land, building, anything can be there. Whatever assets are there. Shares of Nairobi Limited. Shares of Nairobi Limited. Exactly the same thing will be done in a practical world. Okay. How many shares are there? 25,000 into what is the market price? 25 lakh. This is the first asset I have. Then shares of Dakar Limited. 35,000 into 300. 1 crore 5 lakhs. 35,000 into 300. 1 crore 5 lakhs. 1 crore 5 lakhs. Third is shares of Senegal Limited. 29,000 into 380. 29,000 into 380. 1 crore 1 lakh 20,000. Fourth one is shares of Hero Limited. 40,000 into 500. 2 crore. Any doubts on this? 40,000 into 500, 2 crores. Any doubts on this? Clear? Total value of assets. These are the only assets in this question. There can be extra, most of the question can have another item called cash and bank balance. Total value of all assets. Tell me the total. 4 crore, 20 lakh, 20,000. Less liabilities. Less liabilities. Less liabilities. They have given, I think, 2 liabilities here. Accrued expenses 2 lakh 50. Accrued expenses 2 lakh 50. Other liabilities 2 lakh. Total liabilities. Total liabilities 4 lakh 50. Total liabilities 4 lakh 50. Once you deduct this, it is called net asset value of the fund. The NAV name is because of this only, net asset value of the fund. Divide by number of units, net asset value per unit. Net asset value per unit. Net asset is asset minus liability. Net asset is asset minus liability. Net asset value of fund. Another name in practical world is assets under management. This is another name for this. Assets under management, AUM. They use this term in the practical world. Assets under management. Net asset value of the fund. Deduct this and tell me 4 crore, 15 lakh 70,000. 15 lakh 70,000. Number of units. Number of units. number of units. How many units are there? 10 lakh. NAV per unit. NAV per unit divide 4 crore 15 divided by 10 lakh. How much? 5. Practical world, NAV can go on till 4 decimal. Units can also go on in decimal. Okay. It can be 4, it can be 3 depending on the materiality of that company. Any doubts on this? Clear? A straightforward simple question just to get started with. Any doubts on this? Can you proceed? Clear? Go through 13. Go through 13 and I want you to complete part 1. Part 1 I want you to do NAV of the fund. Listen for a minute. They have asked NAV of the fund, get the NAV of the fund, divide by number of units, NAV per unit. NAV of the fund and NAV per unit. Both you have to do. Part 1 you complete it. Part 2 and 3 I'll take you through. Part 1 please complete it. So for NAV calculation, I'll have to do the multiplication. 10,000 into 19.7, which is 1 lakh 97,000. 50,000 into 482.6, 2 crore 41 lakh 30,000. 10,000 into 264, 2 crore 64 lakh 40,000. 1 lakh into 674, 6 crore 74 lakh 90,000, and 30,000 into 25.9, 7 lakh 77,000, all put together. Okay, sorry, 26 lakh. Okay, 26 lakh 44,000, all put together. What's the total? 9 crore 52 lakh 38,000 divided by 8 lakh 119.0475. I'll keep it as 4 decimal. You can debate on the number of decimal, but NAV normally practical world 4 decimal. Okay, 119.0475. Any doubts on this? Clear? Okay. Second and third part is where I want to discuss now. Any doubts on 119.0475? Mr. X sends a check of 50 lakhs to the fund. Sends a check of 50 lakhs to the fund, and the fund manager purchases 18,000 shares of C Limited, and the balance is held in bank. What will be the position of the fund? And calculate the new NAV. Calculate the new NAV. We did the NAV calculation. We got answer as 119.0475. A person, Mr. X, is coming inside the mutual fund now. He is giving us 50 lakh rupees. I will be giving him 50 lakh divided by 119.0475. I'll give him 50 lakh divided by 119.0475 and I'll give him units. I'll give him units. I got that 50 lakh. With that, no change in A limited value, no change in B limited value. C limited, I've added extra share. C limited, I've added extra shares, and whatever 50 lakh he gave me, some of them can still be in the form of cash as per the question. As per the question, balance is held in bank. I have purchased 18,000 shares of C Limited. Have they given any purchase price in the question? 18,000 shares of C Limited. Any purchase price is given? If not given, I assume it was purchased at 264.40. It was purchased at 264.40. This is April 2, which is separate analysis. April 2 will come to in a separate analysis. So I have done the NAV calculation. After I did the NAV calculation, I get to know an extra information. This 50 lakh would have come before the NAV is calculated. Practical world, whenever somebody invests in a mutual fund, he will never know at what NAV is buying. Reason is, you have to place an order before 2:30 p.m. every day. Today, if I place at 2:30 p.m., I will be allotted units at the day end NAV. Day end, that is 11 p.m. They'll calculate the NAV. At that NAV, allotment will happen. Always in the practical world, whenever somebody buys a mutual fund, he will never know the NAV, because NAV will be calculated at the end of the day and units will be allotted. So somewhere this is like an extra information saying that somebody is coming into the mutual fund because he came in, my assets are changing, liabilities are not changing, number of units are changing, and NAV will obviously change. Next, computation of our next working note, new position, new position of the fund and revised NAV. 5 columns, particulars calculation amount, another calculation amount. Another calculation amount I'll explain later. Particulars calculation amount and again a calculation amount. Market value of assets. Market value of assets. Market value of assets. Whatever assets we had, we'll keep writing them. One change will happen. C Limited, we are buying more shares. First is shares of A Limited. A Limited, you have in your notebook, same thing only you have to write. Shares of A Limited, 10,000 into 19.7. 1,97,000. 1,97,000. Shares of B Limited, 50,000 into 482.60. 2 crore 41 lakh 30,000. Shares of C Limited. Now listen. In C Limited, I originally had 10,000 share. We get to know that somebody had come into the fund. He gave 50 lakh rupees and I have purchased how many more shares? 18,000 more share. So 10,000 plus 18,000 into 264.4 into 264.4, 74 lakh 3,200. I purchased extra share. Others continue the same thing. Shares of D Limited. D Limited 1 lakh into 674.90. Shares of E Limited 30,000 into 25.9. And one asset is cash. One asset is cash. One asset is cash. Leave some 7-8 lines. Note, it is assumed 18,000 shares. 18,000 shares are purchased on April 1 at closing price of 264.40. This is an assumption. I don't have any other choice. I need to know at what price I purchase. Reason, I want to know what is the cash balance. For calculating cash balance, I want to know at what price did I make the purchase. And my assumption is I purchased it at the rate of 264.40. No other option available. If I had any other option, I would have done that. At closing price of 264.40. Any doubts on this? Clear? Cash 18,000 into 264.40. 47,59,200. 47,59,200. Sorry, not no, sorry. Sorry. 50 lakh. Sorry. 50 lakh minus this. Minus this. Cash is 50 lakh minus this. 50 lakh minus this. 2 lakh 4800. Leftover value. 2 lakh 4800. Sorry. 50 lakh minus this. Any doubts on this? Can you proceed? 50 lakh minus 18,000 into 264.40. Any doubts on this? Can you proceed? value of all assets. Total value of all assets. Ten crore 2,38,000. 10 crore 2,38,000. Any doubts on the numbers here? Value of all assets is 10,02,38. Any doubts on this? Clear? Without this working, the point I would have, so his doubt is, can I give the answer directly, add 50 lakh to the earlier value? No. Reason is they've asked what will be the position of the fund. So I'm showing the position of the fund. Otherwise, what you are saying is right. Last time your total was 9 crore 52 lakh. Just add 50 lakhs to that. Just add 50 lakhs to that. That is the answer. I knew the number, but presentation will be needed because they've asked what will be the position of the fund. So this is how the fund will look as of now. Any doubts on this? Next, number of units. Number of units. If the position of the fund was not asked, this presentation is not needed. Number of units, we originally had 8 lakh plus 8 lakh plus how much? 50 lakhs divided by the NAV at this place. I am not exaggerating. Many students have added 18,000. They confused saying that you have purchased 18,000 shares, 18,000 units are allotted to this person. There is no link. There is no link between the units and the shares. No link. I'm telling you this. Still, after some time when you revise this chapter, you will get this confusion. So make it very clear. Else, that is why I've separately covered it as one extra point in the concept book. Any doubts on this? Units allotment will happen at NAV. It has nothing to do. Practical world. There is this Parag Parikh mutual fund where they have 1 lakh crore. In that 1 lakh crore, 20%, because they're feeling market is overvalued, they have not used 20,000 crores in the form of cash and bank balance. They've kept 20% in the form of, when I say cash and bank, some fixed deposit. They have not used it because they feel market is overvalued. So many times when you enter, the fund manager immediately will not buy anything from that. He will keep that money. He will spot an opportunity, and then this and all will not happen in practical world. 50 lakh came immediately buying. All that cannot happen in the practical world. It will be in the form of cash for few days. Later, if I feel there is an available opportunity, I will buy it. So 8 lakh plus extra units, 50 lakh divided by 119,0475. We can do exact 42,000. The rounding off will not have any difference here. Divided by 119,0475. 42,000.042. I'm ignoring that 042 because not a material impact on the answer. Can in the practical world it be 0.042? Yes, in the practical world it will be in decimal. Units will be in decimal. Here that extra decimal will not make any difference. 8 lakh 42,000 NAV. NAV per unit. You calculate and then confirm this. Any doubts till this first? Any doubts on this? Any doubts on this? Now this takes me to my next concept. I didn't want to do it, explain it like this. Impact of events on NAV. Fresh purchase or redemption. No impact as numerator and denominator is impacted equally. No impact as the numerator and denominator is impacted equally. Without doing, if I tell you this, maybe you find it little difficult to visualize. We have done a question where 50 lakh was added in the numerator. Your 952 became extra 50 lakh. In the denominator, proportionate units got added. Proportionate units got added. NAV will not change. NAV will not change. Any doubts till this? Okay, when is the NAV going to change? Next data. Calculate the new NAV if on what? 2nd April, these are the prices. If asset value changes, NAV will undergo a change. Now, next calculation and amount in bracket April 2. This is April 2. Same thing, but the price will be different now. Shares of A Limited 10,000 not into 19.7. You have a different rate now. So now NAV will undergo a change. Now NAV will undergo a change. 10,000 into the price is undergoing a change now. Into what is the price now? 20.3 into 20.3. 30,000 into 513.7. 513.7. 2 crore 56 lakh 85,000. Any doubts on this? Next, C Limited 28,000 into 290.80. 290.80. How much is it? 22,400. D Limited 1 lakh into 671.90. 6 crore 71 lakh 90,000. E Limited 30,000 into 44.20. 44.20. How much? 13 lakh 26. Will the cash change? Will the cash change? Yes, no. Cash will not change. Listen, some students have again made an error saying that now I will do into 290.80 because the price is 290. No, purchase is already done. Purchase is already done. Now cash balance can't change. Purchase is already done because they were thinking when I do the rework scenario, I will deduct into 290.80. That logic will not work because we have already purchased the share. Already purchased the share. Any doubts on this? Cash remains 240,800. Put a total. It will obviously change. The total will change now. 10 crore. 27 lakh only. 27 lakh. 87,200. You guys can check the total. I'm not getting into the total part and all. 10, 27, 87, 200. 10, 27, 87, 200. 842. NAV will obviously change now. Again a 4 decimal answer. NAV will 100% change now. 122. 122.0751. NAV will undergo change now. NAV can change only if the asset and liabilities value change. It cannot change just because a person is coming inside or a person is going outside. Because if it changes for that, then it is not right. So person can come in, person can go out. It doesn't really matter. Any doubts on this? 122.0751 is the new NAV. Any doubts on this? Clear? Can you proceed? Any doubts on this? I give you a minute. Go through it. Do your taking whatever you want to do. 1 minute for you. Okay. In your material, IC has given a similar question. I could have removed this question also, but you have kept it. You will do this at home. Question 14. Same question. Same question. In your comments, when you do, you can write same as question 13 so that you don't see this question again. I could have removed it also, but I kept it. So you do this at home. Exactly same requirement just for your practice. Let's come to question 15. A mutual fund made an issue of 1 lakh units of 10 each on January 1, 2021. No entry load was charged. It made the following investments. Particulars amount: 25,000 equity shares, 5% government security, 10% debenture, 8% debenture. During the year, dividend were received on equity share. Interest on all type of debt securities was received as and when due. 31st December 2021, equity shares appreciated by 15%, listed debentures 20% premium. XYZ on 15th December in its AGM declared the interim dividend of 10%, bonus shares at 1:10 with the record date being 28th December 2021. Find out the NAV given that expenses paid during the year 3 lakh. NAV if the MF has distributed a dividend. If you are the investor, what is the annualized rate of return? What is the annualized rate of return? Go through the question. Entire question will not be able to solve. I know what part I want to do today. We'll do that part alone. Go through the question first. Okay. Coming to the question, a mutual fund made an issue of 10 lakh units of 10 each on January 1, 2021. I started with 10 lakh into 10. I made certain purchases. Equity shares were purchased, government security was purchased, debentures were purchased, 10%, 8%. All these are my assets. During the year, some dividend was received, interest was received, and on 31st December 2021, at the end of the period, share price increased by 15%. Listed debentures were quoting at 20% premium. They have not given anything on unlisted debenture. That will be at whatever value given in that table. I cannot change it. If something is given, give effect to it. Nothing is given, whatever value they gave as purchase price will copy paste. On 15th December 2021, in its AGM, declared the interim dividend of 10%. This XYZ Limited declared an interim dividend of 10% and a bonus. And a bonus was declared at the rate of 1:10. What is the impact of bonus declaration? Is number of shares will go up. Number of shares will go up with the record date being 28th December 2021. So by 28th December, the record date means by in a day or two, all this allotments will happen. So when I do my closing calculation, number of equity shares will change. Number of equity shares will change. Price will obviously change. There is some data they have given. Now, one main asset of a mutual fund is cash balance. There's something called as a cash balance, which there will be two types of question. One type of a question where you can track the cash inflow and outflow. What is tracking? I started 1 lakh, 10 lakh into 10. I purchased shares, I purchased debentures, I purchased government security, I received dividend, I paid expenses. All data is there in the question. If you have to prepare a cash book. You have to prepare a cash book. Cash book, obviously, you know what you do. You'll have to record all receipts, record all payments, and get the closing cash balance. Get the closing cash balance. If you can track the inflows and outflows given in the question. In this problem, when you read the data, they said we started with this much. That is the cash inflow. We purchased something. That is the cash outflow. We received some dividend. We paid some expenses. We received some interest. So if you are able to track inflow and outflow, if you are able to track inflow and outflow, you will have to prepare a cash book. You will have to prepare a cash book. Today's session, we will focus on only cash book preparation. That will give me the cash balance. Once this is calculated, tomorrow's session, when we will do NAV calculation. In that, all assets will be noted and one of the asset will be cash balance. In case tracking is not possible, record cash if it's given in the problem. Not given, ignore it. You can't do anything. First problem when we did, there was no information of cash balance. We ignored it. Second problem when we did, in that rework scenario, we had some data on cash calculation. We considered it. So cash is one of the important asset of a mutual fund where data could be given directly to you and data may not be given. If it is given, then record directly. If not given, see can you track the inflows and outflow. Now, how do I track inflow and outflow? It said a mutual fund made an issue of 10 lakh units of 10. Inflow 10 lakh into 10. Outflow 25,000 equity share, 5% government security, 10% debenture, 8% debenture. During the year, dividend received inflow. Interest on all type of debt security was received as and when due. As and when due, you get the interest income. On 31st December, equity shares appreciated. That is mostly a book entry. declared an interim dividend. So another dividend I have received. And then in the end, find out the NAV if the expenses paid is 3 lakh. If the expenses paid is 3 lakh. So if you are able to track all inflows and outflows, you can prepare a cash book. You cannot track it, ignore cash balance. So here we are just going to do cash book. Cash book, obviously, you know, but you'll have to track the inflows and outflows. If tracking is not possible, which many questions will do. For example, the first question we did in NAV calculation, that asset or that mutual fund also could have had a cash balance, because cash balance will be there in most of the mutual fund, but I had no information. I ignored it. I ignored and proceeded. Working note 1, computation of closing cash. Computation of closing cash. Closing cash, particulars calculation amount. Closing cash, particulars calculation amount. Inflow from unit holders. Inflow from unit holders. We started with 10 lakh units of 10 each. That is the start. 10 lakh units of 10 each. 1 crore. In this 1 crore, ideally, there will be some initial expense and all. They have not given. Let's leave it. 10 lakh into 10 came in. Can extra people come inside in between? Yes, it can come. I have no information, so I'm ignoring it. Less purchase of shares and bonds. Put a total and tell me. Less purchase of shares and bonds. We purchased all of this. Minus 99 lakh. Cash balance reduced. 99 lakh. And exact purpose is this only. The purpose was only this, to buy all of this. Add dividends received. Dividends received during the year. Dividend of 8 lakh were received on equity share. Dividends received 8 lakh. Clear? Then add interest on 5% government security. All the security were receiving interest. 5% government security. Before you do the calculation, always check when is the start of this mutual fund, which date? 1st January. And when is the ending date? So 1 year interest. It could be 9-month interest also in between. It could be a 9-month interest also. This is a 1 year. 5% government security, 4 lakh into 5%. 4 lakh into 5%. Interest on 10% debenture. 10% debenture. 5 lakh into 10%. 50,000. 5 lakh into 10%, 50,000. Interest on 8% debenture. 10 lakh into 8%. 80,000. Any doubts till this? Okay. After this, there's one more information. XYZ Limited on 15th December in its AGM declared an interim dividend of 10%. This 10% is declared by XYZ Limited. This 10% is assumed as dividend rate. Dividend rate is you multiply with face value. You multiply with, normally it is dividend rate. If it's dividend yield, then you multiply with 320 rupees. You multiply with 320 rupees. Normally it's dividend rate only. Declared a dividend of how much? 10%. So 10% on face value is 10. Now my only question is, will I receive it on 25,000 shares or 25,000 plus extra bonus share? this dividend, only 25,000 or 25,000 plus extra bonus shares allotted, only on 25,000. Reason is both are happening at same point of time. In case bonus is happening and dividend was declared after bonus, after some time, then I may get not only on 25,000, I may get on 25,000 plus extra. This question came in exam, and this is your ICI study material question, same question, but without this, right, this bonus adjustment, without the bonus adjustment. Next question you will do later at home once I'm done with this question. This question is there in ICI study material, but without bonus adjustment, without the bonus adjustment, and they just added this extra part called bonus. Why I keep talking about this? Because these are the extra things, they'll keep doing it in question. So on 25,000 shares, I'll be receiving interim dividend. Interim dividend is 10. What is the record date? 28th December. Two things can happen, okay? By 31st December, this money could hit my bank account. If it hits my bank account, it will be part of cash balance. If it doesn't hit, it will be part of an asset called accrued dividend. It will be a part of an asset called accrued dividend. This is a dividend which I am going to receive. I am going to receive. If received, cash balance increases, asset value increases. If not received, accrued dividend increases, asset value increases. Accrued dividend increases, asset value increases. So whether that money comes to me, does not come to me, doesn't matter when I do NAV calculation. Assumption that money has come to me, okay, that dividend has come. Somebody says no, dividend was not received by 31st December. No problem, don't write it in the cash balance. In the assets, one of the asset is going to be accrued dividend. Like you have accrued interest, you will have an asset called accrued dividend. Accrued dividend, ultimately it will form part of my net asset value of the fund. It will form part of the net asset value of the fund. Whether it came to me or it did not come does not matter. Once I'm eligible, to get it, either add it in cash balance or add it as an asset called accrued dividend. Next, add interim dividend. Interim dividend assumed be received before December 31. Be received before December 31. Assumed to be received before December 31. 25,000 into 10. There's one more item in the question. Less expenses paid. Less expenses paid. 3 lakh. Closing cash is how much? Okay. Others please confirm it. 10 lakh rupees is the closing cash. Closing cash 10 lakh rupees. Any doubts on this? Clear? Even in this, assuming they say operating expenses not yet paid. If paid, cash balance goes down, net assets go down. If not paid, it is a liability, net assets will still go down. If not paid, it is a liability, net assets will still go down. Whether expenses paid, not paid, income received, not received, do not really matter, because we will follow accrual principle on daily basis. It is on daily basis in the practical world. Any doubts on this? So today's session, the main concept which I did was NAV calculation, were not fully discussed. NAV, we have learnt that NAV is equal to value of all asset minus value of all liability divided by number of units. All assets, in that you have to do fair value. Fair value means market price, and one of the asset is going to be cash. If you can track the inflow and outflow, do a cash book and calculate the closing cash. Not able to track, question gives you balance, write it. Not able to track, question not given, ignore it. Clear? Any doubts on this? We're yet to complete the question. I'll continue in the next session. One homework question I've given in between. I may not discuss that homework question because it's exactly same. So you just repeat it at home for your practice. Okay, clear? We'll end with this. Thank you, friends.